When I started looking into investing nearly 10 years ago, I'd say I wasn't ready at all. I really had no idea what I was doing, didn't understand some of the key concepts, and I definitely had no idea what a stocks and shares ISA was. I was never going to know otherwise though, as like all of us, I wasn't taught anything about all of this from my parents or from school. The best I learned was that probably you should save some money for a rainy day. That's about it. I only really fell into investing, and when I do look back, I realise there were a few things that had to happen to enable me to start in the first place, which I think that a lot of you will probably experience along the way. If I rewind the clock when I was back at university, and during that time I had a ton of debt, all of my student loans, the maximum amount of overdraft you could have in student bank accounts. Now, luckily, I did manage to go to university when it was £3,000 a year and not £9,000 a year like it was now. But either way, once you added all those loans up, I still came out with around £25,000 or so of debt, and that doesn't even include my overdrafts and the credit cards. Now, in hindsight, I really should have got a job or something along the way rather than just play so much Call of Duty, but then I was never going to get to level 10 prestige, was I? So I graduated in 2010 and I needed to get a job straight away because there was no way that I was going to survive like a lot of very lucky people who went on then to travel the world, take a gap year, or were able to move back to a nice family home in a big city.
Yeah, no. I'm on my gap year.
I managed to lock down my first job with the one and only Enterprise Rent-A-Car.
Hello, Britain! Hello.
Which was based at the branch in good old Byker, which is just outside of Newcastle, where I actually went to university. My salary was a whopping £16,000 a year. I'd made it, ladies and gentlemen. Beggars can't be choosers though. After taxes and doing some overtime, I remember that my take-home pay was only around £1,000, and once I'd taken out my rent, my bills and all of my other debt payments, which were pretty much the minimum I was trying to pay, I'd still be in the red.
I've got nothing left!
By the way, if you're wondering how this ties back to investing, just bear with me, it will all make sense in the end. Anyway, this was problem number one, and of course something that a lot of people face every month in this country and around the world. The money coming in didn't match the money going out, and my free 0% APR overdraft student loan was quickly going to become a very expensive interest-based overdraft as well. So after a year, I packed my bags up and headed to an IT sales job in Manchester, as I knew that no matter how hard I worked in that role, my prospects were pretty limited, and nobody likes having to clean a car, drop it off to a customer, wait to be picked up in blizzard, and that was a cold winter back then. Fast forward a few years, and then in the world of sales, especially in the IT sector, there's lots of commission to be made if you do well. You get a cut of the profits, and before you know it, you can start getting nice lump sum payments each month. Now at this point, I still have no idea about investing, but I do realise that I wanted to get my debts paid off, especially all the debts I had on my credit cards, and finally also try and get myself out of that overdraft and start to have a little bit of at least positive cash left in my account each month. I also thought at this time in my life that I'd also want to get on the housing ladder too, because I was renting a flat at the time, and like most people, the next logical step for me was getting a house. That rent money always felt like to me wasted money paying off someone else's mortgage. And here's one of my first real lessons from the video. From my perspective, there's no rush to start investing until you've got your house in order, and that could work out both literally and metaphorically. If you've got overdraft debt, credit card debt and other high interest loans, then paying those down first and saving the money on the interest is a guaranteed investment. Like, if the interest rate is 10% for example on a credit card, and you can pay it off early, you save 10% of the amount that's left. That's a pretty good return. On a side note, getting used to be able to save money to be able to pay off debts is a really important lesson to learn, and something that I also learned the hard way. If you're enjoying the video so far, please do drop me a like. It really does help out small channels like mine get in front of more people like you. Anyway, back to the story. I had loads of credit cards with every provider, even as an 18-year-old student with some pretty big credit limits, and I always got more offers, 0% interest here for 18 months, 24% interest here, etc. Then before you know it, the years rolls over and you've still not quite cleared the balance, and this is when companies really start to make their money. So first things first, if you can do that, in my personal opinion, get those paid off first, as it will really set you up for the next step in this story. Now, on to getting onto the housing ladder, and I actually managed to get the house I'm currently still living in now for a decent price, and I bought it with my brother at the time. It didn't take too long to save for it because I was pretty fortunate with my job, and the fact that house prices up here in Manchester were still pretty reasonable, although that's always changing by the day. Once you've got a house, anyone watching who knows will realise that although it's a nice feeling and you're always great having your own place, it does come with all the added cost and responsibilities. Since living here, I've done the windows, the kitchen, all of the upstairs rooms, garden, new shed, almost everything. And all of those things cost money, which is cash that you need to have as soon as your builders are finished. Which brings me on to the next lesson. We've all got things that come up in life that we need money for and we can't escape, and not everything is all about the returns. I don't think me having a new shed or double glazing was going to get me 20% return every year, but it did mean that the house was nice to live in and enjoy. And I'm glad I did my kitchen up because I finally found a leak on an old lead pipe which must have been going for years. Having cash for these events is really important, and there's no alternative. Unless you can get a 0% offer or something, my opinion would just be to avoid these, otherwise you'll just increase your outgoings even more than you've just started to get them in the right direction. Ultimately, the point here is that if you need money now for something, there's no point having it invested because it could easily lose money in the short term and there's no guarantees. We can't really invest until we've reached the point where that money we save is specifically for that purpose. Anyway, fast forward some time now and I was finally in the position to be able to get some money invested into the markets. I still had no idea what I was doing. I've got some funds into Hargreaves Lansdown using their platform Plus thing, which creates this portfolio for you. I thought, yeah, fine, that looks okay. I think I started with $1,000 or $2,000, I can't remember exactly the amount. I think I only even started looking at it because a friend of mine showed me his portfolio at work and said, yeah, it's easy, just look how much money I've made over time. And ultimately, I knew that that was the only way forward, but I still should have really understood what I was doing because that would end up hurting me quite a bit later on. And that brings me on to kind of my next reason that we shouldn't be investing right now. Unless we understand exactly what we're doing, we'll end up getting really worried about our money and not knowing what we're looking at. I really should have looked a bit more into detail about what investing into funds meant, the difference between active and passive, and the real benefits of index fund investing, of which I had no idea about. Now, this lesson is one of the most important and still applies to individual companies too, which you might want to invest in. Because what happens is when times are not so good, like right now in the stock market, you start questioning what your money is doing. Have you made the right choice? What am I doing? I'm losing money. Should I just sell everything and cut my losses? And I can say I did this on more than one occasion, which was really stupid, and I should have just left it in hindsight. I also then got into some other debts rather than be careful with my money, as my lifestyle was creeping up as I was earning more and more money. Getting a fancy car, going on nicer holidays, buying designer clothes and shoes, eating out more, and all of these things crept up on me, and before I knew it, I was spending more money than I was making in a month. It was only really in the last few years where I've really got to grips with investing, read a ton of books around the subject, watched loads of videos here on YouTube of course, and just generally got into the weeds of it a bit more, whereby I'm now a lot more confident about my plans moving forward, how long-term investing really works, and how to really understand my own psychology, especially when things aren't going so well. Because that really is where fortunes can be made or lost, I think. Everyone's a hero in a bull market when things are going up, but when stocks are down 50%, we've really got to be holding our nerves and need to go back to our reasons for investing in that to ensure that our conviction is really still there. When I'd sold out of the market, one of the biggest difficulties in hindsight was trying to know when to get back in, for example. And COVID's a good example of this as well. I thought I was lucky to be out of the market and things were not looking good around the world. I'll just sit this one out and invest later. But then as the weeks and months go by and the recovery of stock prices actually happened a lot quicker than expected, there was no way I was going to be able to time the market, which of course is one of the final lessons of this story. Trying to time the market is a complete fool's game, and if there was anyone who could do it successfully, they'd not just be rich, they'd be the richest person in the world pretty easily. The issue is that you've got to time the bottom and the top, which is even harder than just trying to time one or the other, as that could just be a matter of a dice roll and 50-50. The problem with the market is that overall, in the long run, the market goes up as the wider economy grows, so staying out of the market is actually a bet against the stock market, which technically is a thing that's less likely to happen. And on any given week or month, you're more likely to see a gain, even if it's just a very small one. But other than that, who knows in the short term. So here's what I've realised then on my journey so far, and I've still got a really long way to go, make no mistake about it. Before you invest, you'll really want to get your house in order, and that's my personal opinion. Get that debt paid down, start making sure that you can spend less than you make, and have long enough timescales too, so that you can give yourself the best chance of making a lot of money. Also, try and invest with money that you don't need in the short term too. If you want to get a house or save for a deposit, putting that money into the stock market for 6 months or a year is anyone's guess what might happen, whereas saying that over 10 to 20 years, your outlook is a lot better. Also, when looking at the types of investments, just find something that suits you and your own level of risk. We're all different and our journeys are going to be very bumpy along the way too. So whether you want to be all in on index funds and bonds, or even pick your own stocks, find what works for you but commit to it and make sure you give it enough time to work. If you've got cash set to the side to cover your living costs and anything unexpected, you'll be a lot less likely to sell on the way down, which is a sure way of losing money really fast, especially in the market we're in now. It's funny that the stock market is one of the only places where we don't like going to when there's a sale on. With anything else, we'd be snapping up bargains and counting ourselves lucky. But instead we're fearful. It's really odd, but just be aware of it. So moving forward, I hope I can be as transparent as possible and keep showing you all what I'm doing with my plans, I want to contribute as much as possible to my investments without really destroying my current quality of life. But over the years, I've changed my outlook on the things that I value, and I definitely don't care really now about fancy cars and clothes much. I'd rather much have that money to invest in than buy a fancy new pair of trainers, but that's just me. So I guess what I'm doing is pursuing some level of what people call financial independence, where my investments can hopefully, in theory, pay for my living costs and provide me more options. But I don't really have a specific number yet in mind or anything like that. Yes, I'd love to become a millionaire just because it sounds cool, and if you did draw down and sell 4% of that every year, just for a rough guide, you'd have a very, very comfortable living and pretty much do that indefinitely. But for now, I'll just keep doing what I'm doing. I hope that all makes sense then. I absolutely believe that you should invest and that everyone in the country should be an investor on some level. Most of us already will be through workplace pensions already, but realising the power of investing and what it can do over many years once compounded is well worth the effort in my view. Even really small amounts of money can grow given enough time to make a real difference. But if I haven't made it clear already from my story in this video, it's up to you to choose your own path. Get everything else in order first, and then you'll become a great investor and better than probably 99% of people out there. If you can learn from my mistakes, then all I'll say is that I'm very jealous indeed. If you need any help getting started, feel free to check out all of my videos on investing for beginners, which I will leave on the screen now, which is a great playlist for 2022. Until then, drop me a like if you found the video useful, subscribe for more, and I'll see you in the next one. And until then, as always, happy investing.